because its debt to GDP is far higher than peer nations. That hasn't changed.
That hasn't changed.
So what are they saying? I really don't understand how they're thinking this through. Are they saying that our debt to GDP is going to come down from 68% in 2016 to closer to 44%, which is the median for this rating class? That's a huge change. How? Continuing to get reactions to the Moody's decision to upgrade India's sovereign rating. Joining us on the phone line is Keki Mistry of HDFC Limited. Mr. Mistry, good morning. Thanks so much for joining us. Your thoughts, a lot of people we've spoken to have said that this was long overdue and is an acknowledgement of the reform path we've taken.
It is an acknowledgement of the fact that there have been so many initiatives that the government has taken in recent times. You had the demonetization, you had GST, you had the RERA, you had the capitalization of the public sector banks. So I think all these steps taken together have given more confidence to international rating agencies, international investors on India's strength and India's core growth.
Mr. Mistry, what, to your sense, is the sort of tangible benefit of something like this? A lot of people have said that perhaps corporates that are going out and raising money abroad, and you've been raising money through masala bonds, will benefit in terms of tighter spreads, lower borrowing costs.
Undoubtedly, whenever there is at the end of the day, whenever you borrow money, the borrowing is subject to what your rating is. Now, the rating is not just of the company per se, but also when you do an international funding, it's a rating of the country. So if the country rating improves, then any international funding you do will come in at a lower cost.
Would you anticipate any adjustment in the borrowing cost domestically though, sir? Probably not, right?
Probably not, excepting that if confidence gets better and or confidence improves, which obviously it does, sentiments get better. Sentiments always have a role to play. So, sometimes bond yields get impacted negatively for no rhyme or reason, other than sentiments have gotten weakened. So this improves sentiments, it can improve bond yields a little bit. I have no idea, I'm not in Bombay, I have no idea where markets are, but my sense is that this can certainly result in improvement in bonds.
Yields are down 10 basis points, sir. The currency is stronger by almost 1% as well.
Logically, that's what one would expect.
Right, Mr. Mistry, just sort of one question on what is happening on the ground now. The timing of this Moody's upgrade is interesting because it's coming at a time when domestically sentiment was not exactly particularly cheerful. I think a lot of companies have been worried, markets have been worried, we've been worried about the fisc as well. Does this do anything to improve sentiment? Perhaps that's the only thing it can really do at this point in time. Tangible benefits, as you pointed out, are slightly minimal probably.
I would say the sentiments certainly will get better, and I don't think sentiments were that negative in India in any case. If you see it reflected in stock market valuations, if you see it reflected in, it's just that the investment climate in India has been weak for a while, and this doesn't do anything to start investments. A change in rating by itself is not going to change the investment climate. It's not that more people are going to start investing just because rating has sort of improved. But having said that, if you leave aside the lack of any significant private sector investment, other than that, the sentiments are good. I mean, people may have their own concerns around GST and stuff like that, but these are all short-term measures. In the long term, GST is very good for the system. In the long term, RERA is very good for the system. So these are structural long-term benefits that flow into the economy. And they will bring with them some short-term in terms of compliance and stuff like that.
All right, Mr. Mistry, thank you so much. Appreciate you taking the time to speak with us here on BloombergQuint. That's Keki Mistry reacting along the same lines that everybody has. And honestly, there isn't much in terms of differential reactions that you can expect. Everyone appreciates that this is a good sentiment booster for India, appreciates that Moody's has taken note of all of the all of the reforms that the government has undertaken. The short term, of course, still remains cloudy or foggy, as Neelkant Mishra of Credit Suisse has been calling it, because you don't know how growth is going to play out, you don't know how the government's finances are going to play out, and you don't know how quickly the adjustment from an informal sector to a formal sector will take place and how painful it will be. We continue to get reactions on this here on BloombergQuint.